Okay, good afternoon, everyone, and welcome to this Zurich Broker Development event on risk management information systems. My name is Alan Ross, and I'm hosting for today, just to hopefully make sure everything runs smoothly and to facilitate the sessions. Before we get started, just some housekeeping is how the session will run. To try and get the most out of it for all of us. Please feel free to put questions in the Q&A section as we go. So that's sort of on the top right of your screen, just to the side slightly. And we'll come to those at the end of the session today once we've heard from our speakers. We are going to record the webinar and we'll make it available after the session today as well. So you can either rewatch it or you can share it with colleagues. Just a health warning as well. As we're talking about risk management information systems, there will be some sort of data on show. Just in case this concerns you, all of the data that you see will be simulated data. None of it is real or applies to real individuals. If you've got any technical issues with the webinar today, leaving and rejoining will help solve most of those. And you will get a short feedback survey after the event, either today or tomorrow, and we'll also share a copy of the slides that we used. So you'll have those for your reference. In terms of the actual content of the session, we're talking about risk management information systems because digital systems and digitalisation is affecting all sectors, and commercial insurance is no different. But many of the customers that you and we work with are awash with data about the risks, or they're thinking about how can we actually make use of the data that we do have. And for various reasons, they might not get the insight that they need to act upon that data that they do have. But as our customers invest in that sort of digital future and how they manage the risk with using the data they do have, the challenge for all of us is how to support them to maximise the benefit they can get from that data. And risk management information systems is one way of doing that. And it also brings opportunities for us collectively in terms of trying to understand our customers and engage with them and understand what the risks are and how we might support them. And some of you will be confident in having those conversations with customers. Some of you may be less confident. And certainly organisations might be on a kind of early stages of their journey to adopting some of these tools and systems. So hopefully this session will help either improve or reinforce your understanding of risk management information systems, what they are and how they can support your efforts to support your customers. But I'm glad I'm not leading you through this discussion. We've got two subject matter experts. First person you'll hear from is Joseph White, and Joseph used to be, or is a project manager with Zurich Resilience Solutions, but he was a senior risk management consultant working with Zurich's customers on risk and resilience issues, and he's been involved in developing and deploying many digital solutions as part of Zurich's Innovation Foundry. The second person you're going to hear from is Peter D, and some of you will be familiar with Pete. He's the National Sales Manager for Zurich Resilience Solutions, and he leads our engagement with brokers within ZRS, and also working closely with Zurich teams in the regions across the country. And Pete has been in various roles within Zurich and elsewhere in both a sales and business development role, but also in underwriting. And more recently, relevant to today's session, he's been involved in rolling out ZRS's risk management information system. So without further delay, I'll hand over to Joseph to start this session.
Thank you, Alan. Good afternoon, everybody. Thanks for your time today. Before we start on one of the points Alan was talking about, really, we'd like to run a really quick poll if we could, entirely anonymous, just to get a feel for how comfortable would you be having a conversation with a customer about the benefits of adopting a risk management information system. So if you'd please click a button to tell us, would you be very comfortable, moderately comfortable, slightly comfortable, or not at all comfortable? The most people I can see so far in front of me are saying they'd be moderately comfortable. There's still ticking up by a few. Followed by slightly and not at all, which probably is about what I was expecting, I hope. It would have certainly been a difficult task for Pete and me today if everyone had come back and said they were very comfortable. So hopefully we can do something today to kind of increase your understanding and awareness around this topic. But thank you for your response there. So I guess in the time that we have, I'm going to cover off to kind of build on what Alan talked about. I'm going to start by covering off a bit of a background. So why are we talking about this topic and why now? Give some context as to kind of what the whole digital landscape means for risk and insurance, and specifically, hopefully, start to talk about and demystify what a RIMIS is, and show you an example of this. Really, it's classically one of those things in the risk and insurance world. Everyone refers to it by its acronym, as we love them, certainly do in Zurich. And yes, let's hopefully put some context and some background on this. So if we move forward, essentially, I mean, we, brought ballpark numbers. What we said when we did a survey on this a couple of years ago of our commercial insurance customers, the number was that 48% of commercial clients believe that digital enhancements will have a significant impact on the insurance market in the next 3 years. The reality is, if we look at the left-hand side of this slide, as with most innovation, it tends to start in the personal individual space. Most innovation starts in a kind of business to consumer landscape, and the corporate world, the business to business world, tends to limp along slowly behind in reality. So what this has meant for us from an insurance context, really, as I think most of us are probably aware, is that most of the innovation and digital innovation in this space has really happened in the personal line space. The reality is, you'd probably argue the personal insurance aspect of that line is even further up than it is now. I mean, who doesn't do their personal insurance online these days? The thoughts of ringing up somebody, it's just the way we do it these days. What we're now seeing is that this concept is now creeping into it's gone through the small commercial space. Life insurance is increasingly digitized, and we're now seeing this creeping into the commercial corporate space, which, as I said, has been previously very slow in adoption of digital solutions. Typically, when you think about adoption and trends, this is the kind of classic curve where things tend to have a slow startup. They plateau for a certain period of time and then ramp up at pace towards that tipping point, as I say, where it starts to be push comes to shove. So the commercial insurance, large commercial insurance in particular, is really starting to move and motor in this space in the context of where it was previously. When we think about look at the right-hand side of this box, really this starts to just explain what this means in terms of risk management systems and RIMIS. You can start to see one of the factors there around the driver of things like the pandemic, which has also fueled this really. And this was from a report of a couple of years ago that the independent RIMIS marketplace has grown at faster rate than over the fast time. So I think the digital penny is starting to drop in the commercial insurance space. Building on that, we'll kind of start to now explore how these interactions take place and what they mean for different types of customer interaction and transaction. So looking across the lines, we've seen a significant increase in growth in e-placement, conducting the binding transactions online. Gone are the days when someone in Lloyd's would be stamping a slip. More and more of these things are now done on an electronic basis. Data enrichment and enhancement. So, it's no longer just data being shared between a customer, broker, and insurer. As I'm sure everyone's aware, there's a myriad of third-party data inputs and flows to inform the risk view now, and they're not slowing down. There's more and more of these every single day. We're in the midst of the Zurich Innovation Championship right now, and a significant proportion of those are all related to that topic. On the right-hand side, we think about technology supporting risk management and risk mitigation. Now, this is a big one for us in ZRS. So how can we use technology and digital solutions to better support risk identification, assessment, and management? So trying to make that as easy, simple, straightforward as possible, really, and facilitate the quality of the data in there and the data approach. The other key point here is the more data we consume and how we consume it is having an impact on the way our customer risk profiles are changing in a dynamic way. So the reality is we're moving from having data input that said it was a factory made of concrete and it's at a certain location to a much more richer data, more dynamic, more specific, more detailed. So we can start to say it's made of concrete, it's at this location, but then we can pull in weather data, climate data, supply chain data. We might have IoT devices live streaming, and all of this is happening in the same time as previously we would have had the basic information. So there's a really strong, compelling argument that this is how the world will work moving forward. Thinking then how this contact and interaction takes place. The reality is we don't have to go back that far to days pre-email. I'm sure there's a few people on the call that may remember those. The reality is email is still the predominant method for information exchange. We've looked at and developed a number of portals, which are still there, but actually, I guess email is still as commonplace as much as anything. Increasingly, another thing, I guess, accelerated by the pandemic is we're moving more and more to the system-to-system connectivity, using what they call an application. I knew I was going to programming interface. Thank you. And essentially, this is about trying to connect systems together and get that dynamic flow of data between organizations on an ongoing basis. There is a lot of conversation and dialogue. I read things every day talking to me about ecosystems. And I think that's the way that we will head, but it's as yet probably not quite charted out there. But essentially, it's an extension of the system-to-system connectivity. And as I said, a number of these things were ramped up by necessity, really, under things like pandemic conditions. So how many organizations moved from physical checks to electronic payments, for example? How much of this has forced an ability to actually interact electronically? The main point of this slide really is to explain and articulate the fact that not everybody is at the same point on this journey. We've got some digitally ready customers already. They will likely be the ones that have already got risk management information system platforms. But for a lot of organizations, that's been a significant investment in terms of finances and resource to get to that point in time. The reality is, to date, it's really been the preserve of the large blue chips who've got the time and resources to do that. Now what we're seeing is those organizations that are digitally ambitious or digital newcomers are hungry to jump on board. They're getting fed up with the world on the left-hand side, and they want to start to move to more of the right-hand side. So really what we need to do is we need to understand and enable customers to access a flexible set of solutions, really, that enables a range of different customers to access this, not just the very large organizations. So when we talk about a RIMIS, what do we mean? So essentially, most organizations do all of the things on the left-hand side already. They have to, in most instances. They'll be doing it. The reality is that for a lot of organizations, it'll be disparate, it'll be disorganized, probably heavily manual, or in different systems, none of which talk to each other. The real value and concept of a RIMIS, as articulated by that wheel example in the middle, is, of which RIMIS is one element, is it starts to be a one-stop shop. It's one place where you can see all of your risk information, and it's all combined into one view. So really the key functionality of this is so you get full line of sight and connectivity of all the data, but it also becomes a proactive system. So it allows you to start to use it as your risk management one-stop shop. It's not just a repository. A risk management information system, RIMIS, shouldn't be just a repository or a data storage location. Really, it should be something that allows you to dynamically use, analyze, and act on an ongoing basis. You'd be able to pull down reports and downloads and really use it in a dynamic way. Drilling in a little bit further, here's a couple of examples, screenshots. So typically, across in the blue bars across the top, you'd expect to see things like your policies, your properties, your locations, your claims, your incidents, have a view on your root cause analysis profile, start to look and crunch data of the examples we have on here, and increase, as I say, starting to pull across types of data, so property by claim, for example, or incidents at a certain location or a certain a part of the organization. This allows you to really start to spot and identify those areas where we should be focusing on. And the second piece of this then is you start to look at your profile in terms of your property recommendations, your corrective actions, your root cause analysis. So where do we have gaps? Where have we identified that we need to manage risks more effectively? And actually, how can we manage and track those on an ongoing basis? So this is really true risk management and mitigation in action. So having hopefully given you some context and some background, and explained a bit of what a RIMIS is, I'd now like to hand over to Pete, who will start to put it in further context for the benefits and the what does this mean for a customer and for a broker.
Good afternoon, everyone, and thank you, Joe. A really good insight to the background and positioning of a RIMIS system. So I'm looking at this probably more from a sales angle. How can you visualize this from a sales perspective and put that into kind of graphic images as best as I can? So I'll move the slides forward. We've grouped these into analysis, controls, records, and truth. So to expand on what we mean here, what's in it for the customer? A RIMIS system brings dry policy documents alive, clearly visualizes what is going on from a claims perspective. A good system should allow a customer to visualize their insurable risk, which includes physical asset management. It puts a customer in a powerful position where they can clearly spot new claims trends which might develop due to the implementation of a new policy, or perhaps due to a lack of policy, a lack of training, or occur in a particular department or with a particular person. The ability to quickly and clearly visualize this promotes swift corrective actions, which is the heart of claims defensibility. In terms of controls, it stimulates the process of control. A good RIMIS system does that. Is it a lack of training? Induction to new employees and their orientation to the business or a particular task? Is it due to a local practice in one location? Is that a training requirement for managers? A RIMIS system will prompt the thinking process. What's been done to correct the issue? Who's doing it and by when? Can you realistically blame someone driving a forklift truck into stacked racking, causing multiple injuries? Can you blame that on the driver if no one checked his CV and licenses? No one checked if the driver had been through a training program or one that the policyholder warrants as an acceptable standard to the company? Can you blame them if the forklift truck itself has not been properly maintained? A RIMIS system will promote the implementation of risk controls and keeping them relevant and up to date, and that there is a risk owner assigned. Better still, a RIMIS system can often be proactive and set to prompt particular action owners and assigned owners. In terms of records, perhaps less obvious is the physical property risk. Manual warehouses and high-risk areas naturally demand attention, but what about the state of the electrics in the property stock? When were they last checked? Are there any mandatory checks required, and when are they due? Who's monitoring it? A good RMIS system will help customers visualize this and make that connection to potential claims and assign risk owners. It can attach claims to locations and insurance policies. So if your office block in Southampton, as an example, is enjoying more than its fair share of trip claims and injured employees, when was the last time an inspection occurred? Who did it? What was the outcome? Are you satisfied as a customer you've done everything you could reasonably be expected to do to mitigate the risk? Perhaps the customer is starting to see a high sickness rate in their staff. Has a competent person been assigned to investigate this? There are currently instances of sickness, but are they being tracked and assessed? Tracking, investigating and correlating incidents and doing a root cause analysis on incidents that are not claims signposts corrective actions before they turn into a claim and potentially multiple claimants, in this case perhaps Legionella. A RMIS system encourages this discipline and provides a clear, coherent, structured format, and moreover, and importantly, provides a view across multiple stakeholders so actions can be coordinated and quickly coordinated. These are often the determining factors should the health and safety executive choose to investigate a claim, and may determine if your organisation is fined for gross neglect, or moreover determine the course of a claim through the legal process. It's basic claims defensibility. So in truth, adopting a quality RMIS system should promote a proactive approach to managing insurable risks, and it should provide an immediate view to multiple risk managers in order to coordinate a response quickly and efficiently across departments. RMIS systems should also provide an area where a customer can collate all their policy details so they can quickly and clearly determine where they are managing their own self-insured retention and are not covered for risk, and their limits of indemnity where their cover runs out. Perhaps as an example, your insurance company during a routine survey has identified waste pallets that are stacked against a warehouse at one of your locations and should be cleared away or moved from a stated distance from the building, as this is a known arson and fire propagation risk. Do you know who's been assigned to this task? When are they going to implement this action and confirm it's a risk closed off? Not only is the RMIS system providing a platform to track this, but it can proactively alert the assigned risk owner. Not only in this situation is there a risk of a catastrophic claim involving property and life, but there's every chance if the action is not completed, cover may be withdrawn by the insurer and a claim without insurance could lead to a complete failure of your business. Adopting the discipline promoted by a RMIS system will encourage that your key insurable risks are up to date. This discipline will help to ensure your insurers are happy that they're insuring the true risk to the policyholder, the policyholder presents. And moreover, the knowledge the customer is using a RMIS system will give the insurer further confidence the customer is proactively managing the risk they are tasked with insuring. It would more than likely promote obtaining an insurance quote at a favourable rate rather than struggling to obtain placement at rates that reflect an underwriter's view of a more poorly managed risk. The same discipline will also help to ensure, should the worst happen and claims do occur, that there is no failure on behalf of the policyholder with their duty to disclose material facts upon which the underwriters use to determine fair pricing. A breach of this duty can, with some insurers, lead to the application of average on a claim. Depending on the size of that claim, this has a far deeper financial impact on the insured than at the premium pricing stage. Aside from this, it will be coming at a time when the customer needs indemnification the most, particularly on injury or catastrophic claims, as a significant shortfall could ultimately lead again to the failure of a business. Just think about the adequacy of your BI values, just for example. So in summary, the benefit to the customer, the ability to see it all, map it out clearly, helps them to make informed choices about how much risk transfer they actually need, how much risk they're prepared to bear themselves. Marrying this up with seeing an up-to-date view of the claims being incurred will help inform those choices. A good RIMIS system sets out a risk management structure in a clear, coherent manner, which should be easy to interpret and to report from. A good RIMIS system should also promote the right risk behaviours and help to mitigate these potential outcomes, not only protecting the people and property, but ultimately the customer and their business. So what's in it for the broker, the intermediary? From a clarity point of view, insurance underwriters will be really keen knowing if a customer is adopting the discipline of a RIMIS system in helping control their risk, rather than on disparately stored bits of paper or spreadsheet records. And the chances are you're more likely to secure quotes rather than spending your valuable time chasing and pushing the market into potentially writing risks they might consider less attractive and actually might damage your reputation with your insurer partners. In terms of time, as a trusted advisor, there'll be a lot of chasing with customers to provide this information. It would be great if all customers were using a RIMIS system where you could provide this quickly and easily. You'd spend less time chasing, more time advising. Surely a good thing from a broker's point of view. In terms of relationships, it provides you with the opportunity to develop a contact strategy and pick up key risk talking points with your customers. Help determine far more quickly if the customer is properly insured, has the right level of cover, and therefore spend more time sourcing that cover than chasing details. These discussion points inevitably for a broker lead to other discussions about the customers a risk a customer may face with their business and present clear opportunities for the broker in helping customers. Depending on the strength of your relationship with your customers, you could potentially consider a free structure for being the operator for the customer of a RIMIS system. It's a powerful place to be for a broker, being able to see, act and respond swiftly to a customer's risk issues in a live context. Once you have a customer on board with a RIMIS system, you have a very, very useful retention tool. It's an additional USP to offer in a renewal and a new business opportunity that sets you apart. Every broker will know from experience, if they aren't offering something, one of your competitors will be. So in summary, using a RIMIS puts you at the absolute front of a digital revolution that Joseph has described. It will keep you relevant in this new space as new digital developments come to light. There's many around the corner. Supply chain mapping, ESG, they're all in scope for the future. And they are doing, so these developments are growing and developing rapidly right now. So truth be known, we move with it or we get left behind. So that concludes my piece and I'll pass back over to Alan.
Thanks, Pete. Thanks, Joe. Yeah, really interesting to sort of understand more about how these systems are used and the types of information that they can be put in. So we've now got sort of time for questions and answers. So please, there are two options. So there's the Q&A function within Teams. So if you want to ask a question, you can type your question in there. Alternatively, if you want to sort of come off mute, if you want to digitally raise your hand and speak to Joe or Pete and ask them a question directly, we can do that as well. So just while people are sort of thinking about questions to put to Pete and Joe, I just wonder, you talked about the sort of, I think Pete, you talked about different bits of paper and emails and information kind of flying around. I wonder where, if you start to populate this RIMIS, where is the information, where is the data coming from? How does it get input into the system? Who owns that? Who gets access to it? I'm just wondering what that looks like from the customer journey point of view, if you like, from having the spreadsheets and the emails and the PDFs to actually having the RIMIS. How does that work? How does the data get into the system?
Okay, so there's one benefit to being a Zurich insurance customer is that you'll have an API link directly to claims data. The other, outside of Zurich insurance, there is a manual process. We would, from a claims data perspective, it's a CSV file. In terms of the kind of hygiene documents you're talking about, Alan, so things like survey reports, PDFs, all the variety of information that you would see and need to collate, there are areas within a good system that should include for that. So a good system will be proactive. It will assign an owner if there's a particular risk requirement from an insurer. Someone could attach that to a risk owner and it proactively prompts that risk owner at the time that it's due. So it's designed, a good system will be designed to be proactive and have that kind of internal correspondence system. So you get that integrated cooperative approach. Is there anything you wanted to add to that, Joe?
Yeah, well, I think it's probably fair to say it's a bit of a mixed bag right now, Alan. I think a lot of organizations have adopted the functionality and are still working on how to best maximize use of them. As Pete has said, I think that certainly the direction that the industry is looking to go on this is to physically connect these systems via API and to get that regular flow of automated data rather than be sort of hidebound by cumbersome processes moving forward. The other piece of this, the example I gave was things like we might be able to connect it to property systems or asset management system and start to put our physical locations into this. And actually what a customer could then potentially look to do would be to then align this with the flood mapping data, for example, so that you would start to correlate the two of those in one page. So I think certainly, the expectation and the way this is certainly heading is that most of that data entry would be automated. But I think it's fair to say a lot of organizations and systems are not quite at that point yet.
Yeah, because I guess that reduces the sort of barrier to entry, if you like, in terms of adopting a RMIS, if you can then automate a lot of that data gathering, data entry.
Yeah.
So it's not someone sitting physically sort of inputting that. It also means it's live data. So an API, sorry, just in case there might be people who don't know what an API means, but that is that sort of automated flow of data from one system to another. So it might come from your carrier's claims information, might go directly into the RMIS, for example.
Yeah, I guess briefly, an API was previously described to me like the waiter in a restaurant, where you would be the customer sitting at the table choosing what you want to eat. They have no part of that process, but they would take your order from you and they would bring your order to the kitchen essentially and then give you the order. So the API simply performs that data transfer process between two organizations.
And then the ideal state, therefore, would be to have all these different systems bringing in information. So the RMIS is almost a kind of central repository that you then bring it in and make sense of the data that comes into it.
Absolutely.
Thank you. Okay, we've got a question in the chat from Carla Hill. So thanks, Carla. How does the pricing of the product work? So I guess with RMIS, how would what would we be talking about typically? And I guess systems vary depending on your size of organisation and things. But how does the pricing for a RMIS system typically work? Not sure, Pete, do we want to take that one?
I'll start and then Joseph can dive in if he wants to. But it's done on a individual license basis, and you'll have a number of licensees, and they would subscribe on an annual basis, pretty much like a kind of Microsoft Office 365 type of package arrangement. That would be how most systems would operate. I have seen other variations which are kind of pulling down different types of modules on a kind of monthly basis. Joe, do you want to comment on that, Joe?
Yes, I mean, this is another example where I think the advancements that have been made in the broader digital context are helping us here. So this whole concept of software as a service and platform availability means that individual organizations don't have to go off and develop their own proprietary in-house software at extraordinary cost. So yes, Alan, my experience, most of these are done on a license per license basis, where you would tap into probably one of the organizations already in the industry. As Peter said, though, historically, I guess to date, an awful lot of these systems have been pitched at the larger corporate organizations. So in terms of pricing, you're talking significant cost, the tens of thousands per annum. But I think increasingly what we're trying to do and trying to understand here is the extent to which, as I said back in my part, where these become sort of accessible by the people who are less sophisticated, perhaps, or less capable of shelling out that much on an annual basis.
Yeah, so it's sort of bringing it down from just those kind of multinational blue chips back to your kind of smaller, medium. I know these terms are kind of subjective, but down the size and scale of different organisations down to your less complex or more global.
And the bit I'd just add on that, I think, it's not just probably any digital system. It's not necessarily just the price; it's the complexity, because a lot of the sort of larger priced platforms tend to be pitched at a complex, multinational, multi-layered organization, and when any type of smaller organization tries to access them, they're just borderline impenetrable.
Yeah, because I guess that's one of the issues here, is that with any software system, isn't it? There's often a whole host of features you can have. It's whether you will actually use those features and maximise the benefit of having them, or do you just end up with a really complex system that doesn't actually suit your needs as an organisation. Just another thought. I mean, we've talked about the benefits. Heidi's got before I come to that, Heidi.
I was just going to ask a quick question, if you don't mind. Do you tend to find that underwriters will look at customers that have got a RMIS in a more favourable way, and it makes quite a big difference?
I'll take that one, Joe.
Please.
So I can only speak from a Zurich perspective. Clearly, I'm a Zurich employee. The view I had from one of our corporate underwriters and also some of our business managers was to say, actually, it would give them comfort in terms of the customer's approach to the risk they present. They were talking, the market does not like talking about risk management bursaries, but they were certainly talking in respect of offering two options. If they knew a customer was taking out a RMIS system, they'd be inclined to offer a cheaper alternative at their pricing stage, whether that be at renewal or at new business stage. So I think the answer to that question is, from a Zurich perspective, yes, there was certainly positive overtures.
Thank you.
And I think it broadens out, Heidi, from my side. It isn't just insurers. I think every stakeholder of a company, of an organization these days, is asking for more and more data and more detail on an ongoing basis in a more complex nature.
And we've talked about the benefits and the opportunities and things, but I guess that there will be challenges and barriers to implementation. I'd just be interested in what you think some of those barriers are. And we talked about data input. We've talked about a new system that people have to get used to and so on. What's stopping organisations kind of adopting these now?
I'll go first. I'll go first then.
Go for it, Pete.
So I think there's a fear factor, Alan. I think people are still coming to terms with digitisation and RMIS and all those kind of tools. There will be potentially some systems that people are using already, customers are using already. It might be around a health and safety perspective. Whether they overlap or not, I think those are kind of some of the challenges that potentially are out there. Joseph, did you have any other thoughts on that?
I think the whole jargon and kind of, as it's back to your fear factor piece, I think people have been historically, probably a lot of people would have looked at risk management software and just shied away from it in terms of it's too complex, it's too difficult, I don't need that. I can manage on an Excel spreadsheet. So I think, Alan, probably to answer your question, I guess that one of the barriers will be probably to get that understood at their management team level, really, the benefits, and understand why we should move from our manual systems to this new world will be one of the barriers, I would assume. Hopefully, you know, hopefully, I guess the one of the historic barriers, as I said, has been cost. Traditionally in this space, and they've been so difficult and complex and so hard to onboard. So I think, you know, that one of the challenges, or one of the ways to overcome one of those challenges, really is to try and fit it to your organization, as you say. Really start to understand what are the core processes, what are the core data points that we need, and start to look for digital solutions that can help you manage those. You'll end up potentially buying lots of bells and whistles when you don't.
Yep. The other thing to contribute here as well, Alan, I think maybe some reticence in there in the market with customers around whether the system is invisible to insurers, whether it's an apolitical system. I think we call those apolitical systems. Are they in ownership of the data, or where is the data going? And I think, you know, giving the customer confidence that actually it's their data and it's not being shared openly is quite important.
Yeah, and I guess, yeah, then the customer, if they do choose to change carrier, they can take that. They're not losing access to the data. They've got that data available to them, and they're not losing access to the system either, because they choose to move. Okay. If there are no sort of other questions in that case, I'd just like to thank everyone for attending, but especially Joe and Pete for leading us through the discussion. I certainly found it useful and interesting. We'll email a copy of the slides. We'll get out to you. We'll email those to you. Please feel free if you want to have conversations after today, if this has prompted any thoughts, or if you do have questions that occur afterwards. I think, yeah, Pete's email is on the slide there, and you get a copy of that deck. So you'll have Pete's email if you do want to get in touch. Other than that, thank you for attending.